if we go back to something we said earlier, which is that money is a tool for the transference of purchasing power across time and space, we get a good frame to look at historical money. So historically, gold has been an excellent means for transferring purchasing power across time because its supply is difficult to expand. However, gold is not so great at moving purchasing power across space because it is physical and heavy. So it's sort of fulfilling the time function, but not so much the space function. So humans, being innovative, we figured out that if we put all the gold in one warehouse or a safe or a bank, whatever you want to call this, I'm going to use the term warehouse today because that makes it pretty clear. If we put all the gold into one or a few warehouses, and then those warehouses issue receipts for the depositors of that gold that they can use to go and redeem that gold in the future, then those receipts can be traded as if they were as good as gold. And paper receipts are obviously much more portable than physical gold. So gold-backed currencies of this kind are very useful, right? They'll transfer purchasing power across time. They're also better at transferring purchasing power across space because they're lighter than physical gold. However, those gold-backed currencies depend on the promises of money warehouse operators. Those operators have to make the promise that they're not going to engage in the fraud of issuing more warehouse receipts than they have in gold reserves. Or said another way, they're not going to issue more warehouse receipts that represented more gold than they actually had in their warehouses. Right? They're going to be true to the accounting function that they are fulfilling, right? Which is to say, every deposit a gold warehouse operator receives of gold is a liability on his balance sheet. He owes someone that gold. Then issues the paper note. The physical gold is an asset on his balance sheet. The note that he issues to his depositor that can be used to redeem that gold is a liability. So the warehouse operator is liable to that customer for that gold he holds on deposit. If they issue more paper notes than they have gold in reserves, then they have more liabilities than they do assets, and they are insolvent, right? This is fractional reserve banking. This is the problem, basically, with gold. That is, so far as we can tell, unsolvable. And I'll get into really how central banking sort of just emerges from this technical failure of gold, or this need to trust the promises of a warehouse operator, why that leads to central banking in a bit. So, I guess, we should probably just go there now to understand just how poorly money warehouse operators have been at keeping this promise, not to engage in fractional reserve banking, not to run an insolvent operation, not to defraud their customers through the overissuance of warehouse receipts. We really need to go back to the beginnings of central banking. And the birth of the modern central bank really begins with the Bank of Amsterdam. So following the creation of the Antwerp Bourse in 1531, which was really a free market, money market, I think one of the first ones of its kind in the West, at least, that was dealing in paper promises for gold. In the wake of this, the Bank of Amsterdam was established roughly 70 years later in 1609 to monopolize and control this market space. So the Bank of Amsterdam's first order of business was to outlaw cashier notes and mandate that all gold and silver coins throughout the city be deposited in their bank. Again, if you're going to monopolize and control the language of power, the first thing you have to do is get it all into your possession. So that's literally the first thing the Bank of Amsterdam did. Basically, by force of law, cashiers were forced to surrender their precious metals in exchange for Bank of Amsterdam warehouse receipts. And this is an important lesson, again, I think for future generations and really anyone that's looking at the nature of money. The Bank of Amsterdam was able to monopolize this layer 2, which we'll call currencies or warehouse receipts, only because it was able to restrict access to layer 1, which were the precious metals themselves, mostly gold. And that's the control, right? The possession is the control, right? Just like with any other asset in the world, physical possession is the ability to control it. Money is the same. We've just really gotten away from our understanding that gold ultimately has to be this commodity, this precious metal, or this energy-backed substance to remain honest across time. We've really lost our grasp of that, and since the founding of this central bank and the subsequent central banks that we'll touch on here. So when the Bank of Amsterdam did this, it controls all money matters in its jurisdiction. It warehouses most of the gold. Not all of the gold, but most of the gold. It's basically making itself a single node transaction database. So this gives them a really unique advantage. The Bank of Amsterdam could basically affect instant transfers between their customers. Since all they have to do, they don't need to move gold around, right? If basically all these people are customers of the central bank just needs to make a ledger entry. All right, so you can just, the stroke of the bookkeeper's pen can be used to move money. Now that's a huge advantage from an information system standpoint, but again, it comes at the price of needing to trust the central bank fully, right? That they'll always maintain the peg, that they won't deauthorize the currency, they won't inflate the currency, etc. And so it was really this set of moves that made the Bank of Amsterdam the first central bank, since by force of law, it was required to be central to all money dealings, and no money dealings were legal outside of its centralized purview. And this also sets up the Bank of Amsterdam for its later move, in which it mandated that all the gold be deposited in its warehouse, and that it was eventually able to eliminate the ability for depositors to withdraw physical gold entirely. So again, if we're looking at the central bank as a warehouse operator, which basically that's what it is, it's a very large centralized warehouse of money, takes in gold from depositors, customers, that's an asset on its balance sheet. It issues paper, which is the customer's ability to redeem that gold in the future. That's a liability. When you eliminate convertibility or redeemability of those paper notes into gold, you are effectively defaulting, right? You are scamming all of your customers, basically. And so this is really the nature of the central bank. And this is kind of this ability to suspend convertibility has been instrumental to every central bank in times of crisis ever since. And it really started with this precedent in the Bank of Amsterdam. So, the significance of that is kind of difficult to understate, rather. When you convince people to trust paper currencies rather than only the underlying precious metal that the paper is intended to represent, the Bank of Amsterdam basically, set the example that all successor central banks would follow, that they're just going to run these insolvent business practices, and in times of crisis, you'll just stick it to the customers by refusing to let them redeem their paper for gold. And indeed, it was the Bank of Amsterdam that directly influenced the creation of its larger and more tyrannical successor, the Bank of England. So fast forward, roughly 1688, this is after the Glorious Revolution, in which the Catholic monarch James II was replaced with his Protestant daughter Mary and her Dutch husband William of Orange. Glorious Revolution basically resulted in a very significant shift of political power away from the monarchy and toward the parliament. And this mirrored similar changes that had occurred in the Netherlands and elsewhere leading up to that. And at the time, England, at the time of the Glorious Revolution, England had a very decentralized money market in which goldsmiths, a number of goldsmiths issued warehouse receipts, circulated notes, discounted bills, and they all competed with one another, right? So, the reason the competition matters a lot is because if any one of these warehouse operators chooses to engage in the fraud of fractional reserve banking, that fraud tends to get exposed more quickly because, customers have other options, right? But if it's a central bank and that fraud is perpetrated, customers have no other options, so the fraud can go on for a much longer period of time and even lead to a zero reserve model, which we call fiat currency, that's been used all over the world for the past 50 years. So, it was ultimately, as is true with most of the history of central banking, that it was the need to finance a war that ultimately drove the English crown to replace this decentralized money market system with its own central bank, in many ways copying the Bank of Amsterdam model. And the story of the Bank of England is also what led to the later international gold standard. So it was the pound sterling that had been used as the currency denomination of England since 1158, when King Henry introduced a silver coin of 92.5% purity. Indeed, this is where, and this is true for a lot of currency denominations, is that they actually are a unit of weight, right? Obviously, the pound, something we still use in the United States, this represented a specific weight in silver, and it did so until later when England started minting a gold coin in 1663 called the guinea, which was named after the part of Africa in which that gold was being mined. So shortly after the creation of the Bank of England, mathematician and physicist Sir Isaac Newton, acting as the master of mint, permanently altered the arc of monetary history by changing the exchange ratio between gold and silver. Now, typically, this exchange ratio would be freely set on the market, but again, because of the centralization of power surrounding the bank, it was basically price setting this ratio. So Newton changed this exchange rate such that it became profitable for arbitrageurs to export silver and to import gold into England. So obviously, by tilting the incentives in this way, it wasn't long before a great deal of gold began to flow into the Bank of England. And because of gold's superior scarcity in comparison to all other precious metals, England moved to an official gold standard a little over a century later. Now, it's unknown whether Newton did this on purpose. It's been said that he really studied, obviously he was an alchemist. He studied gold very intensely most of his life. The guy's a polymath. We have Newton's, what he had prior to Einstein, it was Newton's laws of physics that we followed, right? Like for every action, there's an equal and opposite reaction. We had this Newtonian understanding of the universe. So this guy was very bright, to say the least. It is possible that he had a grasp of the superior scarcity of gold and therefore chose to standardize England to it as a money to give England a significant economic and geopolitical advantage far into the future, which you could argue something that has persisted for centuries, even unto this day. And, a way to think about this is that money is basically, again, it's a game, right? This game through which we're accounting for and trading favors, but the game, in terms of like the evolutionary perspective on money, the game is to try and hold the form of money that is most difficult to obtain or to produce. And because England standardized to gold, which was the most difficult thing to produce, in doing so, it eventually led to all of these other countries following England after they see England benefit from this advantage that gold gives them over time, which led to the emergence of an international gold standard around the turn of the 20th century. So England, due to the premeditation of Isaac Newton, maybe not, maybe it was accidental, who knows, but it basically became the first mover in this international gold standard game. And that gave England a significant advantage as a global superpower for really many centuries, that persisted all the way up until the United States rise to power in the mid-20th century. Thanks for watching. If you enjoyed this episode, click here to find more just like it, and here to find our most recent episode. Also, make sure to like this video to help shine light on the corruption of money, and be sure to subscribe to this channel to stay connected.